Hello guys, welcome back to the Indian Value Investor. I am Suraj Subramanian, your investment guru. Today's video is about a very important topic in the stock market called futures. Futures is an important member of the family called derivatives. Derivatives is nothing but a financial tool which derives its value from an underlying asset. This derivatives is a section of the stock market where a lot of people have lost a lot of money and a few people have gained even fortunes. For example, Rakesh Jhunjhunwala, who is known as the Warren Buffett of the Indian stock market, is said to have made a lot of money from this futures. So we'll be discussing about futures in today's video. So as usual, let us try to understand what is futures with a very simple example. Here is my friend Irshan Jafar. Irshan Jafar, being a fabulous investor, is always on the lookout of great opportunities. Irshan was looking for buying a flat 6 months back in the city of Kochi in Kerala. He found a great deal and the cost of the flat he was looking for was 1 crore rupees. The builder had told him that he can make a 10% advance for booking the flat to his name, which is 10 lakh rupees. Subsequently, Irshan entered into an agreement with the builder by paying the token advance as prescribed by the builder. Now, by paying this token advance of 10 lakh rupees, Irshan has entered into a financial agreement called the forward contract. Now, what does this contract mean? This contract means that in 6 months, the builder is supposed to give Irshan the flat for rupees 1 crore rupees irrespective of the market scenario then. Let me give you an example of a change in market scenario. Assume that Sachin Tendulkar is buying the flat adjacent to Irshan's. What will happen to the market sentiment of the people buying flats in that particular apartment? Beyond doubt, the market value of that particular apartment is going to increase. Let us, for the understanding purposes, say that the market value of Irshan's flat is increasing to 1 crore 50 lakh rupees. Now, just because the market price has increased to 1 crore 50 lakhs, does it mean that Irshan has to pay 1 crore 50 lakhs? No. It is because he has already entered into an agreement with the builder saying that he'd be paying the balance 90 lakh rupees after 6 months for getting hold of the flat. Now that Irshan's flat's market value has increased, he has two options with his forward contract that he has in his hand. Number one, he can wait for 6 months and take delivery of the flat. Number two, he can transfer this contract to somebody else for a profit. Now let us assume that he chooses option 2 and he wants to sell the contract to somebody else. Now can you guess what would be the price for which he would be selling that contract? The price that he'd be charging for the contract would be 60 lakh rupees. This 60 lakh rupees is nothing but the sum of the 10 lakh rupees that he has paid as the token advance and the 50 lakh rupees, which is the increase in market value of the flat. So what has happened now is that with a mere investment of 10 lakh rupees, Irshan was able to enter into a huge contract of 1 crore rupees. He even made a profit of 50 lakh rupees, which is 500% return on his investment of 10 lakh rupees. Now, what he has got with this forward contract is huge leverage. Now, let us try to understand a futures contract with respect to stock and equity markets. From our earlier example, I am replacing the flat with shares of the company L&T, and the agreement which he has made with the builder is replaced with a digital agreement, a futures contract agreement with another seller in the stock market. Unlike our regular shares, shares in future contracts will come in lots. Let's, for the purpose of understanding, assume that one lot of futures of L&T will have 100 shares. Let's say that each share of L&T in this particular futures agreement is for 1000 rupees. So the contract value of this particular future agreement is 1 lakh rupees, which is nothing but the lot size, which is 100 shares per lot multiplied by the 1000 rupee per share. Like the flat was about to cost him 1 crore rupees, one lot of L&T shares would be costing 1 lakh rupees. And just like the token advance that he had paid in the flats agreement, he has to pay something called the margin in a futures contract. Now let us assume that the margin for this particular futures contract is also 10%, which is 10,000 rupees. So all Irshan has to do is deposit this margin money of 10,000 rupees and enter into a futures contract. So this particular futures contract means that Irshan is agreeing to pay 1,000 rupees per share of L&T for the entire lot, which means he'd be buying this entire lot for 1 lakh rupees irrespective of what price the shares of L&T is trading for at that particular point of time when the contract is expiring. So what happens when the L&T share price increases by 50 rupees in the futures market on a particular day? What happens is that Irshan makes a profit of 5,000 rupees, which is nothing but the 50 rupees multiplied by his lot size, which is 100 shares per lot. Having said that, it is a double-edged sword. So if the price is going down by 50 rupees, Irshan loses 5,000 rupees on the same day. Unlike the forward contract agreement in the flat, this particular futures contract, there is a settlement on a daily basis. So this means that if Irshan is making a profit of 5,000 rupees by the end of the day, his settlement amount would be 15,000 rupees, and on the other hand, if he is making a loss, the margin amount would be reduced to 5,000 rupees. So if he is losing 50 rupees on 2 consecutive days, the entire margin money that he had deposited is washed away. Likewise, if he is gaining 50 rupees on 2 consecutive days, his margin money gets doubled. Now let me check if you have understood this futures contract properly. Calculate and let me know in the comment section below what would have happened to his margin price if he had lost 100 rupees per share in his futures contract on day 1, and on the second day if he gains 100 rupees per share. I hope that from this video you've got a basic idea of what a forwards contract is, likewise what a futures contract means in the stock market. I will get back to you guys with more informative videos shortly. I hope that you're liking my videos. If you do like my videos, do like it, share it and subscribe it. Thank you so much.